Now, 4 years ago today, a landmark piece of legislation became law. The Dodd-Frank law came out of the 2008 recession with the intention of preventing another collapse of a major financial institution like Lehman Brothers, and it does place major regulations on the financial industry. Opponents say the law has stifled economic growth, constrained credit, and overwhelmed the system. Supporters contend that it protects consumers and is needed to tighten governmental regulation to prevent another too-big-to-fail scenario. And perhaps the most pertinent part of the bill, the Volcker Rule, which prohibits banks from risky proprietary trading operations and from owning and investing or sponsoring hedge funds and private equity funds. So how are the banks faring 4 years on? Joining me for this and more is David Nelson, who is Chief Strategist at Bellpoint Asset Management. David, good to have you on the show.
Thanks for having me.
So 4 years on, Dodd-Frank, good idea, bad idea?
Well, you know, it's been 5 years since the financial crisis, and it's no secret that the administration has been waging a war against the banks, and Dodd-Frank is a part of that and has taken away a lot of the profit centers from the banks. But think about it.
Waging a war, David, that's a pretty steep term to use. A lot of people say the government bailed out the banks and rescued them to the detriment of the regular mom and pop and consumers.
Okay, that's a fair comment, but they have waged a war and they've won. They frankly won the war. They've taken away a lot of the proprietary trading. They've taken a lot of the profitable lines of business at this point. But look what also has been created. You just mentioned too big to fail, but now some of these banks are far larger than they were prior to the financial crisis. So I'm not sure if they got exactly what they wanted.
So you don't think it worked in that sense?
I think there's certainly parts of the bill that are very good, but it has also hamstrung the banks in a lot of areas. And I think we're seeing, very sluggish loan growth is part of that problem right now. I certainly applaud some of the efforts, some of the shenanigans that went on, but they went after the banks, and in turn they went after the shareholders. They didn't go after the guys who actually caused this. Nobody went to jail.
Let's not get into the specifics of who should have or shouldn't have gone to jail. Let's focus on how the banks are faring now in this post-regulation era. We had some pretty solid results from the likes of Goldman Sachs and such.
We did, but I would qualify that. Certainly last week, I think most of the earnings from the banks, it was a positive surprise, but I think what we saw was that analysts had just gotten too bearish, and what they managed to do is beat expectations, because for a lot of these banks, the earnings were actually down year over year, and you saw some very steep losses with regards to what's left of trading right now, down 20–25% for some of these banks. So banks are trying to...
So how are they adjusting their business models
to
compensate for this?
They're trying to readjust and reinvent themselves, and for some of the banks it's going to be pretty difficult. Even though Goldman Sachs had a great quarter and surprised the street, the only bright spot that I see is M&A and investment banking. That's doing well.
Mergers and acquisitions.
They lose the proprietary trading, but if you look at a 5-year chart of Goldman Sachs, it tells a story. Over the last 5 years, in one of the greatest bull markets in a generation, Goldman has gone nowhere, and I find it interesting that with the market sitting at close to an all-time high, Goldman has done nothing.
Let's focus on the market overall, and it seems to have fared pretty resiliently with all of these geopolitical tensions.
It has. Pretty surprising, don't you think?
Why? What's the reasoning behind this?
Maybe it's this, Michelle. I think investors maybe have learned their lesson that maybe you have to step back, take a breath, and ask yourself the question, does the geopolitical event that's occurring on the other side of the planet, like the downing of a Malaysian airliner, how does that affect the economics of the companies I'm invested in? And in some cases, it may be nothing at all. So while it looks like the whole world is conspiring to drag down this bull market, I think investors are a little more savvy today than they were 10 years ago.
So they're encouraged by the earnings that we've seen so far?
So far, it's pretty good news. Maybe a little better than expected. This is a big week. 150 companies in the S&P are going to report this week. So I don't want to get too bullish right now. I want to see what transpires, but right now the earnings look pretty good.
Well, David, one of the issues that we had in previous quarters is that companies were beating earnings by cutting their costs. So they were coming better on the bottom line, if you will, coming in with profits, but not necessarily generating more sales and more revenue. What is the reflection What can we learn from what we've seen so far?
You're bringing up a very important point. It doesn't apply to every company, but a perfect example of what you're speaking to is an IBM, which has been doing this for probably a couple of decades. Revenue hasn't grown at all. And I've talked to actually some of the managers at IBM. They've cut so many costs. There's just literally
we saw
nothing.
Microsoft cutting
nothing left to
18,000 jobs.
Well, for Microsoft, that's something they need to do because they just took in Nokia. And I frankly think that current management probably wouldn't have authorized that transaction. That was part of the Steve Ballmer legacy. So they've got to trim some of the fat here. So I think they're going to have to, lean it out even more.
David, we've got a couple of big tech earnings coming out this week. Amazon, Facebook, very quickly, what are your forecasts?
Well, two I own that's coming out. Apple and Microsoft is after the bell tomorrow. We own both. I'm looking for some pretty good numbers from both names. Less important for Microsoft because I think it's more important about the guidance and how they're changing the company.
Right.
For Amazon and Facebook is probably going to have a pretty good number. I think the issue for Amazon and Facebook is really more about valuation, is trying to get a handle on their valuation. Facebook is reasonable. Amazon is in the stratosphere.
All right, a lot to watch out for this week. Thank you so much, David Nelson, Chief Strategist at Bell Point.